Are you serious about planning a successful business exit? From Angel to Exit is your go-to resource. Subscribe to our newsletter at eckfeldt.com/podcast for even more valuable insights. And to get personalized guidance, take our free exit readiness assessment. It's just 24 questions, and it will give you a clear picture of your exit readiness. Find the assessment at eckfeldt.com/exit. Submit your results, and we'll schedule a free follow-up call to discuss your specific situation and the best way to maximize your valuation and ensure a successful transaction. Now, back to the episode. Welcome, everyone. This is From Angel to Exit. I'm Bruce Eckfeldt. I'm your host. Our guest today, Laurie Barkman. She is founder and CEO of the Business Transition Sherpa. We're going to hear about her story, having gone through quite a major exit as a CEO, and then the work she's doing today, working with folks that are in that transition period, figuring out their strategy with their business, what they're going to do next. I'm excited for this because Laurie is not only having exit experience, but having worked with lots of folks through the exit process, get a chance to compare some notes and see what she's learning in the space, what she's found, some of the takeaways. I think there's going to be a lot of great nuggets for folks that are earlier in this process, thinking about an exit at some point in their careers, and hopefully get some good takeaways on things they should think about and consider as they go through that journey. So with all that, Laurie, welcome to the program.
Hey, Bruce, thank you so much. I'm so glad to be with you.
Yeah, it's great to have you here. Before we dive into the work you're doing today and kind of dig into this topic of founders, owners, working through sales, I would love to get kind of personal background. Like, how did you get into the professional space? I know you had a pretty interesting experience as a CEO. Would love to hear the kind of story of getting up to that and then hear about that experience.
Yeah, I think I begin by saying, look, I believe there's an entrepreneurial gene, and I believe I had it, have it, but denied it and hid it for a long time.
Suppressed it as hard as you could.
I suppressed it. And so that's really the nature of the story, I think, in a nutshell, is that I began my career in big co, like around, global companies, management training programs, leadership programs, and grew in my career to the point where I was really known for marketing. I was a leader in marketing. The biggest marketing budget I ran, which is kind of fun to share, this little fun fact, biggest marketing budget I ran in my career was $100 million.
Wow.
That's big. For all the marketers out there going, oh my God.
That's a lot of spend, yeah.
That's a lot of spend. And then here's the other fun fact. And then when I worked in startups throughout my career, I had $1 to spend.
Exactly.
Which is like a
99
joke.
cents.
Which is a joke, but not a joke, right? And so I've literally had the $1 million to $1 marketing budget and everything in between. And so that's kind of the nature of my career, is like, why did I go from big co to startups and back again? Yeah. I think it's because I knew I was a maverick. I knew I liked the intrapreneurial. If I didn't have the big idea or I didn't have the guts to go do something on my own. When I graduated from business school, Bruce, in the late 90s, it was all about the tech startup and getting venture capital and exploring all these things. And I wasn't a tech founder. I didn't have a big idea, and I didn't really have the risk profile, frankly. I had, we just bought a house. We were kind of settling down. I had this debt from the MBA school. And I'm like, I gotta get working here, and begin my career.
I need some cash.
We need to keep the lights on and put food on the table. And that's where I really suppressed. But I think the draw to the startup was, I've always had a big heart for entrepreneurs and founders, because their risk profile is, I respect that a lot. Like, they're taking a lot of risk. They're going after something they believe in. And so fast forward through the career journey, and a recruiter reached out and said, hey, there's a third generation family owned business in your backyard, literally, that I had never heard of. And they were like, yeah, they are recruiting for a CEO position to run a division. So it was a separate entity, which is why I had the CEO title. And it's part of a long-term succession. So everybody knows this is happening. It's not a secret. And they're looking for somebody not for the next 2 years, they're looking for somebody for the next 20. And I was like, holy crap. Wow, self-doubt, all these things creeping in. Am I qualified? Yada, yada. But I went for it, and it was a very lengthy 6-month interview process.
Wow. Yeah.
I was up against some big guns, and I got it. And I was in my young 40s at the time. Of course, it was my first time being a CEO, and I thought, you know what? Even the president of the United States is a first-timer in their job, so I'll be okay.
Someone's got to do it.
Yeah. Somebody has got to jump in and do it. And that's what really got me into call it the kind of the next act of my career. Was first act was kind of the marketing leader and doing cool things on growth. And then the next act was, hey, I've got P&L responsibility for $100 million company that is some e-commerce properties, direct sale. It was pretty big. We also had over 1 million square feet of warehouse space in the U.S. and Canada. So it was a very sizable operation. And then the larger entity was the third generation business. So my direct manager was the chairman. At the time, he was in his probably 60s. And so I reported to the board, and it was a lot of amazing work. It was a lot of amazing pressure. And I think, Bruce, that's the next part of this story is like, okay, well, what happened next? And, what happened to the 20-year story? And it wasn't 20 years, it was 3 years. And the reason why was because a company came a knocking and told our chairman, hey, we've been watching your company for years, 6-7 years. The chairman had no idea. None of us did. And I call this the Bluebird effect. So the Bluebird came and said, we're interested in acquiring your business, the whole company. I remember the day that my boss told me, I almost fell off my chair. It was my birthday. And he said, yeah, we were going to start a sale process here. And we did. And it was a successful sale process. Myself and the other executives had to keep our head down, keep the gas on the pedal, and make sure that we did everything we could to keep the business running. And at the same time, in addition to the day job, we had to help with due diligence and, kind of helping package up this over $1 billion revenue business for sale. It was quite the journey, let me tell you. And that's why it was a shorter time horizon for me, because I found myself after the integration, as part of the integration, senior leadership team and all that kind of stuff. But that was, that was part of the story, right? It's just, it can happen. And then that's really what kicked off what I do today. That's what really got me thinking about business transition and success in the generations and the challenges and pitfalls of having a business that's not ready, having an owner that's not ready. And gosh, I mean, I know this story is a little bit long, but that's fine. That's the genesis of it.
I'm curious, when you took the CEO position, like what were the, I guess, what did you know was going to be a challenge for you? You kind of anticipated a certain amount of challenge in terms of taking that leadership position, and what did you not anticipate that was a challenge? I'm kind of curious what you were prepared for and what you weren't prepared for, and how that played out for you in the beginning.
One of the biggest things is that I knew an internal candidate wanted my job and interviewed for it, and he didn't get it, and then he was my direct report. And he had a very senior role and a very important role on the team. That was very, very challenging. I stepped into that knowing full well that was going to be the situation. It was something I had to deal with for most of the time I was there.
Yeah, that's hard.
It was really hard. I had a target on my back from the beginning. And he had a loyalty from some employees. He had a loyalty from some customers. I never really built a trust with him. And then unfortunately wasn't able to change until we made some changes in the organization. And so that whole journey was just really tough. Yeah.
And I hear that a lot, whether it's, that kind of, jockeying for the position and not getting it, and then somebody reporting into that position can be hard. What were your takeaways on that? Like in the end, like is there anything you would have done differently in that case, given it coming up again, or
I was between a rock and a hard place because he was a very senior leader. He had more than half of the organization reporting to him, was tip of the spear for revenue, things like that. I remember talking to another CEO friend who ran his family business, and it was probably about a month away from me starting, and I was telling him about the situation, and his advice was very clear. He's like, you need to get rid of him right away. And I didn't do that. Did I make the right decision? I don't know. To this day, I still kind of wonder. It's a tough spot when you are, what's the saying? When everything's changing, you can't change everything. And there were some areas of the business that eventually we were going to make changes to, but it's tough when you're a new leader coming in and things were running in an existing way, and there's different existing power centers. And I was starting from scratch, and they had 20 plus years. it was just a tough spot for me to be in. I think I had support from above.
Yep.
I had support from peers. It took a while to get the full support of the management team until we made some changes.
Yeah. Yeah. I guess curious, what helped with the rest of the team in terms of building trust and, coming into these situations is difficult. I mean, they've been together for a long time. There's a lot of history. There's a lot of existing dynamics. You've got a new leadership coming in. Like what are some of the things you learned that were really effective in helping gel that new team?
One of the things that I did was I created a sense of a leadership team. We called it OpCom. That sounds cool, but no, operating committee. So who's on the operating committee? I had added some talented folks. I had promoted some folks. And so we had more of a bench than just sort of the original structure of CEO and, call it chief revenue officer and maybe a couple of other, and CFO. Like it was sort of those three at the head versus more like 7 of us where responsibilities and accountabilities and scope were clarified and people were given the opportunity to kind of step up. And so the other thing I had done was introduce a strategic planning process where I had a lot of a strategic planning experience from some of the big co's I'd been at over the years. Sure. And I brought it here as well as, and from a framework, but also brought literally the facilitator who I had used at one of my corporate jobs and many years before. We had kept in touch, and I knew he had a great touch, he had a great style, and he could help us. And I didn't have to lead it; I could be a participant. That was really important. Yeah. And then the outcome, also, Bruce, that was really cool, was its alignment. When you do strat planning, that's really the main thing: is can you get your team aligned on something they feel excited about? And so we did that. And in addition to that, I had a philosophy about kind of a step level, how do we bring people up and how do we get more people involved than who are literally in the room right now? And so we did that as a sequencing. So we'd had our first set of meetings were probably a little bit larger than you might have expected me to say, because it was more than just OpCom. We had invited their first level direct reports plus people in addition, if they didn't overlap, that they were considered hypos. They were considered high potential because I wanted them to see the process. I wanted them to be involved. I wanted them to weigh in and have a point of view. I wanted them to learn and then also feel that inclusivity, which was part of my larger strategy of how do I get more people on board and not isolate the islands of negativity. I want to get the islands of negativity in the room. That's fine. We'll hear them. Yep. And if they choose not to say anything or they choose to badmouth after the meeting, it's the classic meeting after the meeting. That's bullcrap, right? Yeah. And that's what some people would do. They would have the meeting after the meeting, they would caucus, and they would just generate negativity spirals. And so I was trying to head all of that off at the pass, because if everybody's in the room saying, yep, we're all in on this, that negativity spiral elsewhere got minimized. Yeah, just get it on the table and, either speak now or forever hold your peace kind of call. Yeah, yep. I like it. When did you went into this thinking you were going to be doing this for the next 20 years. Like when did it first come up or occur to you, or there was kind of indications that there might be this sale, or there might be, it might not be 20 years? It was about a year and a half into my tenure, and it was my birthday, and my boss called me into his office, and we were having some business challenges at that time, and I was all prepared with my calculator and my talking points and my binders, and so it was funny when you had a meeting with my boss, you either sat at a long rectangular table or you sat in front of his desk.
Ooh, okay.
And it influenced the kind of meeting you were going to have is where you sat. So I thought we were going to sit at the long rectangular table. And he said, have a seat. And we sat in front of his desk, and I started to panic and I started to sweat. And I was like, oh my God, what is happening right now? And because I'm not prepared for it, whatever it is, And I was right. I really wasn't prepared. And that's when he said, we got a call from this global corporation, transportation logistics, and they've been watching us from afar, and they're interested in acquiring us. And I literally almost fell off my chair. I was like, oh, okay. Not only not having the conversation I thought we were going to have, we're having a completely different conversation than anybody, And he said, this is, kind of the cone of secrecy. Only a few people know about it, and we're going to explore it. And I was like, okay, let's go.
Yeah.
Yep. Yeah. And that was about a year and a half in. And so if you do the math, then it was a year and a half post. So a year and a half pre and a year and a half post. So that was the 3 years.
Yeah. What did they, What was the indicator on the rationale? Was it like just this money is too good? Like there's other factors like, hey, I think this is a better move for us. We want to, we're divesting from these companies. Like what was the underlying motivation behind this?
So it was a full sale of it was an entity sale, right? Of all, everything. And, it was a pretty big company, right? So it was doing over $1 billion in revenue just on its own. And the strategic acquirer said, we would like to do better. We need some of the capabilities and services. Okay. We want to stitch you in. We'll do kind of a hybrid branding to begin, and then eventually, it became more fully integrated branding. Mm-hmm. And now we're talking 10 years ago, right? So obviously by today, the things are well integrated. And at the time, the vision was pretty clear. It was a competitive move. Yep. It was a strategic move, and it was. There were lots of reasons. They also wanted to create some new services for a key industry segment that they felt, e-commerce segment. They wanted to create more services in that segment, and they felt like our capabilities would enable them to do it faster. So all of those reasons were why this big acquirer was interested in our company. And then from our point of view, I'm not family, and I wasn't part of all the board meeting conversations, but the gist of it is this. This was a third generation company that didn't have any family members in the entity past the third gen leader who I mentioned was the chairman. Yeah. They had done a really good job of developing a senior leadership team, both from growing people from within, hiring from the outside, folks like myself, of course, and then also acquisitions. So they had bought before I got there, I think the deal was done maybe 7-8 years even before I got there. They had bought a pretty sizable company in Texas. And one of the benefits of that acquisition was the management team. And so the senior leaders of the company were pretty much from that acquisition. So if you've heard of the term acqui-hire, typically it's like our tech company friends, right, who have these really interesting dev experiences and skills. Well, in this case, the acqui-hire was for the bench of the leadership team. Yeah. So our chairman had the forethought to sort of look ahead and go, okay, wait, we have a gap in who can take this company to the next generation. And next gen was management from the outside, so to speak, not family. Yeah. And if I had to guess, I don't know exactly, but if I had to guess why the family voted for, yes, we should sell, it was probably partly because of that, right? Yeah. And also, it was a way for them to begin a new chapter. I think there were a lot of things I observed along the way. I have a lot of respect for how they did things. On the day of the close, Elvis left the building. I mean, literally, we had a cake, we clapped. It was sad. I mean, it was really sad, right? To imagine leaving. And he had the portraits of grandfather, father, and himself on the wall. It was very, I'll remember that day for a long time. Yeah. So Elvis left the building on the day of the close and began immediately in their next chapter, which I think was really cool. And I describe it as investing in things that are investing for the family. They set up a family office, and the CFO person who was the CFO for our company joined the family office and was the CFO for them. And they started also a foundation investing in causes they care about. And the spouse was not in his spouse was not in the business, but she was very involved, or is very involved, in the foundation. They have 2 sons and then grandkids, and they began a way to get them involved. Some were more involved in the business than others in various times, of course. But so I don't mean to imply they weren't involved. They just weren't involved day to day, right? Yeah. So they definitely knew. I think they had I don't know if they had an official family board, but they definitely communicated with the children, with their adult children. But I think the foundation part was, and I always like to describe it as a way. It's not just like write checks. So they help set goals for organizations they invest in. They're trying to help them in a variety of ways. So I just had a real respect for that and how they went through their transition with grace. And by the way, because there was a change of control provision when the deal closed, myself and others, many others, had a significant amount of money in our genes. And that was incredible. I mean, imagine, right? Some people started working there after high school or college and then worked there 20, 30, 40 years. Yeah. And they were definitely, their hard work was definitely appreciated and recognized. And that was amazing. That was really amazing.
Yeah. Sounds like a great success. I'm curious, as you got into the actually, working through the deal itself and negotiating things, what were the big kind of factors? I guess what were you focused on in terms of driving kind of success of the transaction? Both valuation, getting the deal done. What were the sticking points? I'm just kind of curious what came up, as the process in terms of what you had to deal with in terms of navigating that.
Each of I want to say too, I mean, just to compliment the team, there were about 12 of us who were the executives at the original, at the company. Mm-hmm. So I always describe this as a team effort. We were all running our own P&L. I had my P&L. And so our responsibilities individually were run your business as best you can.
Yeah.
Keep it confidential. Keep everybody focused.
Yep.
And don't take your foot off the gas. And then in addition to that was help us be the management team that the acquirer wants.
Yeah.
And so one of the things I remember was a offsite all-day event, and we prepared presentations about our business unit, and each of us took our turn. And what we were basically told was, this isn't an interview, but it's kind of an interview.
Yeah, exactly.
And that was really, as you can imagine, right, just the pressure. I wanted to do a really good job at that. I wanted to convey the excitement I had to join the big entity. Oh, and then, by the way, Bruce, so they liked all of us. They wanted all of us.
Okay.
And then that became a condition of closing.
Okay, interesting.
Which was really interesting because now, future forward, like I became an M&A advisor, and now I'm talking to my clients about this stuff. And basically what was really interesting for us, it was a condition of close. So we had to accept the job offer with the acquirer and sign an agreement prior to the deal closing, and which was like a weird dynamic, right? But that was part of it. They wanted to get all 12 signatures.
I'm sure.
So they knew we were coming over. Now, would every company do that? No. Okay. That clearly this was a very large transaction. They wanted to make sure they had the leadership team in place. But it is a factor, when you think about transferability and who's the team. And so that was a really big takeaway for me. And I think how it applies in the lower middle market deals, or middle market deals will manifest in some way, shape, or form around my experience.
Yeah. And then how long did you stay on post transaction?
A year and a half.
Okay. And that was that the plan? How did you make that decision? I'm curious what that period was like for you.
I found myself on the other side of integration. I mean, that's just plain and simple. So we consolidated areas of the business, including back office, IT, HR, finance. Those were first. And that's pretty typical on a strategic enterprise integration. It's not a shocker for anybody.
Yeah.
And then the other side of it was more, how are the business units structured? What overhead or headcount is needed? And my group, other groups got combined and consolidated. And so therefore, I got a package.
Yep. Yeah. So I'm kind of curious, for you personally, how was this whole experience? I mean, what did you learn? What was it like to kind of go through these stages? Any big kind of takeaways for you?
I mean, the whole thing was big, just the whole thing. From getting a CEO position, age 42, first female really at that level in the company. It was a role that I was really proud of. And then at the same time, it was almost like Tale of Two Cities. It was the best of times. It was the worst of times. Yeah. I was so stressed all the time. I'd come home and just want to sit on my couch and pet my dog and watch television. I mean, I have kids and I'm a mom and I was active. It wasn't like I was depressed or anything, but I think at times I was like, oh my God, this is a crazy thing. And as much as I liked it and enjoyed it, I learned so much. It was stressful, Bruce. I mean, and then it got real stressful. There were pockets, right? I shared kind of a big thing about trust and my team and stuff. And that was part of it. The other parts of it was when business was great, everything's great. When business is tough, oh my goodness. Yeah. We had to, one of the first things I did when I got there is I won't drop the name of the company, but we had a contract with probably the largest retailer in the country / almost the world. Okay, so you can kind of try to figure out who that is.
Yep.
And we had a contract with them that I had to renegotiate. I actually negotiated a credit from them. Nobody does that, right? I got a credit in the millions of dollars from them. And we negotiated payment terms, which also, if you think about cash flow, right, was worth a lot to us. That was one of the first things I did, right? So it was like, Penny, welcome to the team. Oh my God, here's a shit show you got to fix.
Exactly.
So there were kind of those highs and lows where, again, I was a very thoughtful, try to be a mentor, try to grow the team, try to grow everyone's capabilities. It was an uphill battle in a lot of ways, and on that side of it, I think I learned a lot. Certainly with the deal, I enjoyed my experience as a member of the leadership team, executive team, reporting the board. That I had, it was all new for me, and I really, I got good at it. I would get compliments after board meetings. We had a board member from Dell, and he specifically wrote me a note. It was like, "Thank you for explaining something so complex in a way I can understand." And I'm like, you know what? That's actually one of my superpowers. I've come to realize.
That's a good one.
And it's like, how do you get people to support your vision when they might not inherently understand the business? So we got to start there. I could go on and on for the things I learned. And then I think in managing the stress and managing my return on time, this was 3 years and I had money in my jeans. Like, it was a huge return on time. But what did it cost me? And so as I thought about what do I want to do after the sale, what do I want to do next? I had the benefit of time, right? Still relatively young in my career, if I can call the 40s young. But I think so. And it gave me the ability to choose my path. And boom, I chose the path of being an entrepreneur.
Yeah. 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 So tell me, how did you get from that whole experience to what you're doing today? Fill in the gaps, and let's talk about what you're focused on now.
I was in the shower, where all of our great ideas come from.
Yeah, exactly.
I was in the shower, and a friend about a year ahead of that time frame, I think this is maybe 2019-ish.
Okay.
A year ahead of that, I had lunch with a friend who's an entrepreneur. She created a wonderful fast food concept of Indian food, just really, really good concept. We're having lunch at her restaurant, and she goes, you should be a podcaster. You should have a podcast. I'm like, what are you even talking about? You're crazy. It was that immediate no. Like, why would I do that, right? Yeah. That negative first talk we get in our heads, like, feh, as my grandmother would say, feh. And then my husband was like, oh, yeah, you should do video. I'm like, what are you even saying? Well, mind you, the year, right, 2019. So I'm taking the shower, and I'm like, if I was going to do a show, what would I call it? And I just kept thinking about my experience at this third generation company. And each time that picture on the wall got the baton, right? They were given the keys, and they did something different. So the history of the company was a horse and buggy, blind horse and buggy, by the way, blind horse and a buggy delivering produce up a big hill here in Pittsburgh, in Oakland, from the river. That was the business. That was the original transport business. Then the next gen comes in, and what did they introduce? They introduced trucking and warehousing. Yeah. And then the third generation, again, who was my leader, I was fortunate to work with, his impact was creating what's called reverse logistics. Okay. And so how do we get materials from stores and warehouses that are not going to actively be sold anymore? And that's called reverse logistics. Yeah. Damages, overstocks, whatever, and or recalls in the case of medicines, and you have to destroy and have handling and all that. So I was thinking about that, and I was thinking about innovation, growth, and transition. I'm like, well, yeah, that's pretty consistent throughout my entire, whether I was at big co or small co, startup or big, innovation, growth, and transition. That's just been the threads. Yeah. And so at the time, there was a great show on HBO called Succession. It was a new show. And I started to watch it, and I just kept thinking of that word. And I'm like, boom, that's it. So my podcast is called Succession Stories. And we're now celebrating our 6th year because...
Congratulations, yeah.
Thank you. We launched in 2020, just literally at the start of the pandemic, when we were not able to be in person. And it ended up being a fantastic way to learn and have conversations and meet people, business owners, advisors, not only to learn about this space that we call, kind of the space of next, right? The exit planning space or growth advisory, things like that. And because here I was, I'm like, I want to do something that makes an impact in the world of entrepreneurs. So how can I use my superpowers to do that? Yeah. And there was a bit of exploration, as many entrepreneurs, right? We want to find the pain points. We want to find all the things. And I started with the show. And I guess it was because it was the universe talking to me that was the way to start.
Yeah. And what did you learn? I mean, I guess, having all these conversations with folks, anything that was surprising, having, working with some of these other folks around this process?
Oh my God, I learned so much. Yeah, my original way that I was sort of packaging what I do and who I serve was with strategic planning, because I figured out that that's a superpower. Yeah. And then what I did was I started to get educated from different certifications, so Exit Planning Institute, some other programs, and got certified. And then I figured out a way to kind of put it together that made sense for me. And I call it strategic transition planning. I ended up writing a book about it, and it's I call it the Business Transition Handbook. And so what I did was, at the time I wrote the book, I think I had 120 episodes in or something, and I had all the transcripts. And with ChatGPT it would have been a lot easier, but I manually went through all of my transcripts, and I thought about what does a business owner care about? What are we trying to do here? There's the carrot and the stick. We want to create value. You want to create exit options. So that's the carrot. The stick is, don't step in it, friend. Yeah. Just, you want to avoid the minefields and the pitfalls. So that's the other part of the subtitle of the book. So the subtitle of the book is how to create valuable exit options and avoid transition pitfalls, succession pitfalls. That's the nature of it. We want the plus and we want to avoid the minus. And those, in its essence, Bruce, is what I learned in my conversations from the shows, my own experience, and consulting now at this point with more than 50 clients. It began to be kind of a wrapper, and the book was, I think, a first way for me to really package all those key learnings around personal transition, financial readiness, business value growth, and all the concepts. It's like a mini MBA meets practical stories that we can all relate to in the book. And what the feedback has been so far over the years is like, they feel like I'm like, when they're reading the book, I'm talking with them, which was really my intention, because in a way I was carrying forward the voice from my show, right? When people listen to the show, it's like, yeah, I'm talking with you, right? Yeah. So anyway, I'm really proud of the work, and I absolutely loved, and I still love, having great people on the show, which includes you, by the way. That you've been a guest on the show. It was a great episode. It was fun. And and it just was fortuitous, right? Nobody knew the world was going to shut down, and it just became a fantastic medium to try to put some ideas and concepts together. Yeah.
What are a couple of the kind of pitfalls, quagmires that folks fall into when we're starting to think through this transition process?
Well, and you've probably seen this too in your practice. Many business owners just don't think about their future exit. They don't build towards it. They don't contemplate it until maybe that little bluebird comes a-calling. And that's fair, but the thing to know about the bluebirds is they buy on their time, not yours. And so if we're going to be intentional about a transition, we're going to be intentional about the number one thing that we should be understanding about our business, which is how transferable is it? How attractive is it? What is the value today? What do we think it's worth in the future to us? How does that all tie in with our bigger picture? I guarantee you many, many people, unless they're working with an excellent advisor like yourself or maybe me, they don't put these pieces of the puzzle together until it's too late. And then they wonder, and they're like, oh. And I think, you write about regrets in your new book. I talk about regrets as well. And I describe regrets in the following way. So I'd love to chat with you about your opinion on this, but I think of regrets in two buckets. One is we regret what we did and we wish we did it differently. And the other is we regret what we didn't do. Yeah. And we wish we did those things. And so what I say to everybody is, look, we got to try to avoid both buckets, right? And so if we're intentional, we set goals, we set a plan, and we're not just hoping, hope is not a strategy. We're not just hoping that's going to happen. We're going to be intentional about it. We're going to create a transition vision, an exit vision that we're going to work towards and reverse engineer. And that's ultimately the work that I've been doing now with clients for 6+ years. Yeah.
Yeah, it's an interesting one. I think for me, a lot of it is framed around what's the energy around the decision. And if the energy is one of kind of fear, I find that's where the regret things tend to kind of come up for me. Whether it's, I regretted doing something or regretted not doing something, like when it comes from this place of fear. Whereas if you can come from a place, there's all this VUCA, right? There's uncertainty, like you don't know what's going to happen. I get that. But if you kind of put a stake in the sand and you say, okay, look, but I am going to take action and with the towards some kind of intentional future that I want to create, even if things go totally sideways, shit show, right? Like okay, that's fine. That happened, right? Like maybe I have reflections. Maybe I look back on that and say, yeah, I probably should have thought about this and I could have done it a little differently. But I find it doesn't kind of fall into the regret category so much. It's the learning process. The regret tends to be this kind of, when I did something I had hesitation or fear, that's where I think you run into that, oh, geez, like I wish I would have done this differently.
Yeah, that's a good point. It's almost like the blocker. Why didn't we, right? Well, I was afraid of blah, blah, blah. And that's, I think, the common bond that we have in trying to help business owners on their journey is try to unpack these fears while we have time.
Yeah.
I have a brand new client. He's delightful. He's 70 and he is grateful that we're going to work together, but he's regretful too, because he says, I wish I found you 10 years ago, So I guess that's the overall message, for folks who are thinking about what's their path. I think a lot of people have a misnomer too, like, oh, exit planning, I have to decide. No, you don't. You can create options. Notice the word options. I say that a lot.
Exactly.
Exit options. Well, maybe we prioritize A and we explore A, and A is not going to work out. Okay, now we have B. And I think the other part of regret is when we had one thing, we tried that one thing, it didn't work out, or it worked out, but now we regret it. Maybe we should have done the other thing. Okay, yeah, cool. Let's explore the options while we have time to do so. And, just to kind of piggyback on your notion of fear, I think the counterbalance to fear can be clarity, like of the exploration, finding clarity. Are we always going to be 100% right? No, that's okay. But surround yourself with really good advisors like you, Bruce, and, and maybe me and some other people, like the specialists in tax and law and all these things. This is complicated stuff.
Yeah.
And it's hard to go it alone. I always like to say this to my entrepreneur friends, like, you didn't build your business on your own. So you're not going to go through a transition and an exit plan on your own either.
Yeah. Yeah. Like I like your title of Sherpa, right? I think that's very apropos in terms of what the role is and where the opportunity is for founders, is to explore this stuff. And like you said, now is the time. I always kind of say the best time to plan your exit was when you start the business. The second best time is now, right? It's never too soon, because like you said, you're creating options, right? You're getting yourself in a position of clarity. You're understanding what your drivers are, what your motivation is, what the future is. And then you can, opportunities come up. You're in a much better position to be able to evaluate them and decide, is this opportunity, helping me to where I want to be? Does it not help me where I want to be? So, exit planning is not, okay, well, we're going to exit in 12 months. So here are all the things we're going to do. And then we're going to pull the trigger. It's how do I put myself in a position to be ready to exit at any time, but also happy to keep the company, right? Because I know I've got a valuable asset and I've got a future for what I want to see that I don't need to have an exit on. But if something comes up that gets me where I want to go faster, then great, do it. But you have to have that clarity. So I very much agree with exit planning is really about clarity. It's not about the transaction or the transition itself. So
yeah, I like that.
What are you excited about right now? What programs do you have coming up? What work that you're doing? I'm kind of curious what's on your plate.
Oh my gosh, we're launching some really cool things for a couple of different audiences. The first thing is to introduce a concept or platform I'm calling the Built Method. So the Built Method is really the platform that I'm speaking from about all the aspects you and I discussed, and just sort of packaging it in an acronym we can remember. And so BUILT, right? Each word stands for something. You can guess what the T stands for. It's my favorite word, transition. But it's really conceptually, it's like having the vision, having the pathway, unlocking the blockers, integrating our systems and platforms, leading with clarity, not chaos, and then transition, with confidence and control. So the Built Method led me to create different solutions for two different audiences. One is the business owner audience. I've been working with private clients, for years. And one of the things that I'm doing is launching intensives. So if people can spend a very short, intense amount of time with me, one-on-one, to get clarity on lots of things. There's absolutely a way to work together over Zoom. There's no doubt about that. But I'm really leaning in, Bruce, on experiences, and my clients enjoy working with me. There's a motivation to do the work. A lot of times it's a cold start problem, like, oh my God, there's so much to figure out. So I'm launching these intensives as a way to help people feel like, okay, we're just going to tackle a lot of things right away. The other thing I wanted to mention is for a different audience, and that's for our financial advisor friends out there.
Yeah.
If we have people listening who are financial services advisors, financial wealth advisors, and they are looking for ways to have conversations with clients, I'm launching a new platform. It's a conversational framework called Built by Design, and it's licensable by financial advisors to then use with their clients. And I'm super excited about it. So it's called Built by Design, and it's a great way to introduce a new element to your practice also. So there's total upside with the revenue opportunity, but there's immeasurable value in being sticky in the relationships and making having impactful conversations with your business owner clients. So if anybody wants to learn about either of those things, of course, I'd love to, talk with them.
Yeah. What's the best way to get that information and kind of learn more about what you're doing and your programs? Give us the details.
Yeah. So my website is btsherpa.com.
Okay.
And so that's where people can find all kinds of things that we talked about today, including Built by Design and including our one-on-one advisory work. And if people want to email me, feel free. It's Laurie@btsherpa.com. They can also connect with me on my website, set up a time to chat, and I look forward to it.
Yeah. I highly encourage everyone to check it out. And we'll make sure all the info is in the show notes here so people can get that. Laurie, it's been a pleasure. Thank you so much for taking the time today.
Bruce, it was my pleasure to be with you. Thanks so much.